Raamdeo ji, always a pleasure to have you on ET Now. I'm looking at your numbers for the quarter gone by, and while year on year there is a surge in profits, surge in revenue, growth in AMC business, growth in brokerage business, growth in every other vertical, but quarter on quarter there is a drop. Now, for a business which should not have a cyclicality, why is there a drop?
Yeah, because see, typically we look at only year on year. Sequentially, because of something or other keeps happening, like in the capital market business, there is a bit of drop because of all the changes were made in uh, this options and futures. So that it hit us for 1.5 months. I mean, second half of November and full December. So clearly, there is a sequential drop in that business, which is 60% of the total business. So yes, to some extent, there is a what do you call sobering effect because of that. But otherwise, I think operating year on year has been very strong, almost 48% growth year on year. So the momentum which we are which is built across the 9 months is very high, and same momentum we are seeing even for the current quarter, which is Q4. So operating side, I don't see any slackness in the momentum.
But just to talk about the broking business, Raamdeo ji, you alluded to a weakness which has come there. Volumes are already low. Exchanges have gone on record and they've said by the time the new SEBI law is implemented in totality, volumes may go down further. So can I say that the stress in the brokerage business will continue because it accounts for 60% of your business and that business could contract further?
So it's an emerging situation in the sense that whatever changes are there, that is taking effect and it is having its impact. But since ours is a lot more cash business, and of course we have a very large options business. Almost 50% is options revenue, futures and options revenue, 50% is cash. So the impact on cash side is less, and the impact on option future is a little more. But I mean, on the blended basis. But what is happening is that when we look at the whole company, the growth in the rest of the businesses, rest of the other parts of the capital market is more like 60 to 70%, whereas the growth for broking business will take a beating, and maybe for a quarter or two it could be lower sequentially, but year on year it is still high.
And the mutual fund business now, amid market volatility, the selling in mid cap and small cap stocks, do you think the asset management business could also see some impact, especially inflows into small cap, the new NFOs which you've launched, the PMS business, could that really take a hit also?
And capital market business is always to predict anything is hazardous, I would say. But we had a brilliant December quarter. I mean, our net flow for the quarter, if I'm not wrong, was upwards of 25,000 crores just for a quarter. Before that quarter, it was, I think, 15,000 crores or something like that. So we had the record run, and so that flow is still on. So yes, it can. I mean, always these kind of things don't continue forever. They do subside, but you see, what is happening is the revolution, Nikunj. Broader thing. I mean, apart from Motilal Oswal, what is happening is that there is a first time the private capital flows, the risk capital is coming into the country, and the market is participating in unprecedented way, 3 to 4 million customers every month. So market is clearly horizontally expanding. The pace of expansion, say if it is say 2 or 3% per month on month, that can come down to 1.5%, or maybe for some time zero. But I would say year on year expansion, to say anything about in this fluid environment, to talk about a quarter on quarter is very tough. But if you ask about the broader macro kind of a theme, I would say the year on year 20 to 30%, 40% growth of the industry itself is clearly visible. Now, whether we'll participate, we'll get same market share, higher market share, that is a matter of execution. So I would not look at too much into one quarter here and there. But I think the expansion of the market, irrespective of what is happening to mid or small cap, of course, if they're frothy, they are correcting. So last year, mid and small cap dominated funds, they beat the market big time. Like market did 10%, they did 30-40%. This is the year, my sense is 2025 will be the year when actually index will beat all these funds. You see what is happening. I mean, today it was very hugely contrast in the sense that one side the broad large index is up 1% and other indices they were down by 2-3% or maybe 4%. I don't know what exactly the closing, but so that's the kind of contrast we had. We had last year when everything was working very well, index was very slow, but the market actually was doing very well. Current year market is not doing well actually, but indices are doing very well. So it's a contrast.
Now, markets, Ramdev ji, are big reason why IPOs have done well. IPO business is important business. Given how market conditions are, could the IPO business for you take a hit? And do you see that getting impacted in terms of your next 2 quarters?
It's a dynamic market, and capital raising has been very robust, very consistent week after week, and valuations are also moderating. So what is happening is that the primary market is taking cue in terms of valuation from the secondary market, and they are giving 20-30% discount. If the secondary market is coming down by 10%, obviously the IPO price is also down by 10 to 15% from whatever it would have been. So clearly there is a continuous dynamic adjustment. At some price, promoters will say that I don't want to do it, and that will be the bottom of the market.
So how would you rate the current environment? I mean, valuations are not very cheap. FI outflows are strong. There is a fear of Trump war in the world. Uh, these are market conditions which in a sense are making everybody rethink and reassess their allocation to equities. So what would you in a sense characterize are the key, if I would say, key features of the current market environment for equity investor?
So, Nikunj, I mean, we have seen all this global geopolitical and all. It is very, very tough to fathom. I see two, three things. One is where the corporate earnings are going. You know, if the corporate earnings are robust going forward, I mean, company by company, industry by industry, or aggregate as a whole, I think we have nothing to worry at 18-20 P multiple. That's the average. 18 to 20 is the average for the indices and for the market as a whole. But if the companies are at 100 P multiple, 120, of course, they are in a big danger of dramatic correction in their valuation. Now, valuation correction can be two ways. One is the actual drop in price, and second is the time wise, when the earnings pick up and the stocks don't respond. So both of them will happen. All kinds of action will happen. But if the earnings pick up, and I'm optimistic that in next 12 months, particularly in the first half of next year, the government expenditure will be absolutely normal, and budgetary allocations will be larger, and hence I would think that starting next year there won't be any elections, so there won't be any slowdown in government capex, and by that time even the credit flow, which was very constrained last year, would be under the new regime would be somewhat better, and we are seeing those signs. So I would think it takes time. It took time for the economy to slow down. I mean, what restrictions were taken, say 8 or 9 months back, is showing up now. So what actions you take now, the real impact will be visible after 6 to 8 months. But I would think the second half of 25-26 should be a bumper earning cycle.
You mentioned a tilt towards large cap stocks. Could that be a big message from Raamdeo Agrawal that the party in small and mid cap stocks is over and the store of value has now moved to large caps? And it's not that the first time, Raamdev ji, we've seen this kind of an environment. I distinctly remember between 2016 and 17 and 18, there was a time when only a handful of large cap stocks started outperforming and the rest of the market either was down or was an hibernation.
I would think that broadly what you're saying is the direction in which I'm saying, but I would say much more specifically where the earnings are there, earnings growth is there, and the valuations are reasonable, even if it is a mid cap. But if valuation is right, there is no stigma against a mid cap or a small cap. If the valuations are right, they'll also fly. But as a group, right now valuations are far more reasonable in banking stocks and some large caps compared to mid caps and small caps. So clearly, a broader move would be a lot more large cap centric than mid and small centric.
you've been a big votary of digital business, and the fact that you've just launched Motilal.
If you like this video, then like, share and subscribe to ET Now.